good to once in a while get to talk to you. So I'm very happy to be here.
Well, I am happy that you're on. I'm honored that you're on, and I really can't wait to get a lot of questions about precious metals and everything that's going on in the economy. But let's just start off with Greece and where this is going to take the U.S. and the European nations. I mean, what's your take on Greece? I mean, what do you think is happening there?
What's happening there is you have an unsustainable debt foisted upon an economy that has no manufacturing or natural resources other than some pretty beaches, and you have a society and population that has been racked with socialism. You have a lot of a bunch of collectivists living off the system, and you have all this debt that's been put on there by Germany, in their Fourth Reich attempt to take over Europe without the Blitzkrieg. They can conquer by, debt, and that's what they've done. They've indebted all these nations to these bureaucrats and central bankers for this dream of a supranational state known as the EU. That's all been, done off of the back of the euro. And I find it ironic that Greece should not have ever been involved in the EU had it not been for Goldman Sachs hiding all the debt. And ironically, surreptitiously and probably conspiracy-wise, you have a former Goldman Sachs guy named Mario Draghi, who's the head of the ECB, who's ultimately going to be watching this whole Greek drama play out. But at the end of the day, there's just it's too much debt. It's unsustainable. They can't even pay the interest payments on the debt, much less ever pay off the debt. And now you have a full-on public revolt against the bankers, and then throw on top of it, you also have a humanitarian crisis that's brewing there. Not only the poverty, but you also have refugees coming all over from Turkey and Syria off the mess that we've made there, it's adding to the stress of the area there. And there's only 10 million people that live in Greece. I mean, it's a teeny, it's Manhattan.
Right, yeah.
With a $500 billion worth of debt.
Let me ask you, do you think they're going to, at this point in time, they keep telling us, they're going to stay with the euro, the euro. But they made a deal with Putin for the Turkish Stream pipeline, which is kind of strange if they're going to stay with the euro. Do you think they're staying with the euro, or do you think they're going to pivot away?
No, I don't. I think all they're doing is trying to buy time. That's what I think this whole thing has been. Give the Greek people enough time to get the money out of the banks and take as much cash as they can. But it's an unsustainable thing. It's not politically feasible. The fact that they had this referendum over the weekend where 61% of the people said "ohi," which is Greek for no, to the EU proposal, and they were out in the streets by the millions all over Greece, protesting this thing that's been going on for years. This amount of money that's been taken out of the Greek economy. They're suffering a terrible deflation there because Greece doesn't have their own central bank to print their own amount of currency to continue to keep the system going. So there's no way that this continues on, whether it's a suicide by the Greek people in the euro or if it's a murder by the EU bankers. At some point, this Greek drama is going to end. The euro will not circulate in Greece as the official currency there. They're going to be forced to, issue their own currency, probably the, new drachma or whatever they're going to call it. And, life will go on. It's just going to be even harder times for a good being. But ultimately, that's the rock bottom that the Greek people need to hit in order to, get off the drug of debt. That's what they've got.
Let me ask you, the president came out, President Obama, and he said that, whatever's happening in Greece, it's not going to affect the United States whatsoever. Of course, I don't believe him.
Yeah.
I'm sure you don't believe him.
No.
What impact do you think it's going to have here in the States?
Well, that's the equivalent of saying, Lehman Brothers isn't going to affect, England, and they did. This is an interconnected, globally structured environment that we have here, all based off of fiat illusionary debt. Every central bank, every currency in the world is based off of the debt-based monetary system, and this is a globally interconnected, economy. Nobody's safe from this. Even China, look at what they're going through. The EU, and I think even the worst basket cases bear the names of Japan and the United States. I mean, Japan and the United States are far less trouble when it comes to the amount of debt that they have, even in relationship to the GDP that they have. So to say that Greece isn't going to affect the United States is disingenuous at best and a lie at worst.
So you mentioned something about GDP. Now here in the States, they keep saying that, of course they made their forecast that GDP is going to be, 3%. Then they lowered it to 2.5%, but we see it's in the negative. I mean, we're seeing a lot of these statistical numbers that the government puts out, and most of them are completely fake. I mean, there's no way they can possibly be real from what's going on in the economy. No. So what we're seeing right now, do you think that we are in a recovery, or do you think they're just spinning it that way?
No, they're spinning it that way. If we fully accounted for all the debts that we've accrued as a nation, these unfunded liabilities, I've seen Lawrence Kotlikoff from Boston University say it's as high as $240 trillion, on top of an economy that's, 16 trillion. And that 16 trillion, 70% of it is based off of consumerism, which is the idea that we can print, unfunded or unbacked currency, unlimited, and buy whatever we want, real goods. Cheap Chinese imports, Saudi Arabian oil and BMWs from Germany with all this debt-based monetary system as the world reserve currency. 70% of that is making up that part of the economy, and let's not forget about the other 20% of the economy that's imminently tied to the government, and the government doesn't produce any wealth. So it's I can't even begin to describe how insanely ridiculous this economy is. The inflation numbers are rigged. You look at the medical bills, insurance, food prices of healthy food like organic food. You look at anything that you buy that you need is going up in value, and all the things that you don't need like TVs and consumer goods is consistently dropping, and they weight that more in their inflation scales than anything else.
So, I mean, right now we're seeing the economy like limp along, and we know that there are bubbles. I mean, I see bubbles. I see it in the real estate market. I see it in the stock market. I see it in the automobile industry. I see it in the student loan market. Do you see parallels to 2008?
So, yeah, I mean, I was in the car business in 2008, and I think it was March or May of 2008, the car sales were just ridiculous. And it wasn't that the sales were so much. It was, the people that were buying. I lived in New Jersey. The housing bubble was ridiculous. I, fortunately sold it in 2005. But I watched guys who couldn't sell, a car to anybody, go off into the mortgage business and the real estate business, and they made $1 million in a year. And I'm like, how the hell is that possible? And that's what really got me started on this path of questioning the reality, because I realized, how is it all these young guys are making $1 million and all their parents are these hardworking people who put in their entire life into this system and barely do it, and they act like they know everything? And then that's when I realized that our whole economy is built off of debt. And then I had the shocking realization, the cars, my lifestyle is built off of debt, because nobody comes in and says, here's, a couple pounds of gold for your car. No, what do? They signed a lease contract, which is debt. And when that contract is made, I found out that money is debt. So every time that debt is taken out, that's when money is created. That's what enters the economy. And as a dealer, I got the first slice of that pie, so that people might pay that off in 5 years. Well, I was getting my profit that night for what they were going to pay off 5 years from now. And I was like, God, this is a big Ponzi scheme. Does anybody else know about this? So I ended up researching this further, and then I found out the stock market and the politics and the wars and the monetary cycles and all this stuff, and it's all interrelated. We talked about in the pre-interview, what do you want to talk about? And I said, I don't care. It's all interrelated one way or the other. It all gets down to, what consciousness are we supporting? Are we doing a scarcity mentality or an abundance mentality? Are we going to empower collectivism or build up the individuals? Are we empowering the worst in humanity or the best in humanity? And all these issues all intertwine at the end of the day, whether you're talking about politics, finance, spirituality, it all comes down to these same recurring themes. But yeah, I watched in 2008 all this money being created and all these people coming in to buy cars. And whereas once when I was in Summit, I would watch, these young brokers come in and buy Jeep Grand Cherokees for themselves when they first made some money. They get the limited, and, they were really, wealthy kids at that point, first making money in the early 90s. And, I'd see these guys and they come in. Now, 20 years later, I'm watching, the wives come in to buy, $60,000 Grand Cherokee Limiteds for their nannies just to drop the kids off to school. Like, the whole world got warped just in that time period. And I said, something's not good about this, and I want out. And I ultimately walked away from all my family's dealerships, and I spent 3 years trying to educate my friends and family about all these issues, how important it was, and all I got was, it's never going to happen. Don't worry about it. And I'm like, no, this is going to happen. So I left May of 2008, picked up my family, walked away from my family fortune, with nothing, because I wasn't given the opportunity of even cashing out on that. But I walked away, and I watched in October, the collapse hit, all the things that I predicted, all the things that I wish they had done, sold their property, sold the dealerships, sold everything, cashed out ahead of time, and they didn't. And they ended up losing, 4 Saturn franchises, 3 Mitsubishi. Like, they just lost, so many of these franchises, and then the valuations go down, and then the sales go down. I mean, I can imagine the agita, all my family and friends were feeling afterwards. But the sad thing is, nothing's changed. They're continuing to go on. Like, the gravy train's going. I just saw the record sales since 2005. It's been the highest monthly sales last month. Like, everything's back to normal again, and it's far worse. 2008 was nothing. It was puny billion-dollar corporations that made a couple bad bets. Now, all those bad bets, all that system got sucked up to the sovereign nations at a global systemic level now. It's all the corporate problems got sopped up by the sovereign nations, the central banks of the world. Nothing got changed. The system hasn't changed. Nobody went to jail. There was no reforms. It's actually gotten leveraged up to a much worse place. So all the people who think that the economy's recovered and things are going good and we got this, and don't worry about the stock market being shut down for a couple hours yesterday, keep going out, keep spending, keep buying, keep this Ponzi scheme going. Whatever happened in 2008, whatever you felt in 2008, picture that times 10, because it's going to be that bad. It's going to be global, systemic, and all these nations are going to suffer all at the same time. It's not going to be felt there, and especially Americans who live off of this. 70% of the United States economy is based off of consumerism, buying more than you produce. And we have, a record amount of people out of the labor force. There isn't even a safety net. At least in 2008, the baby boomers had, jobs that they had. They had real estate holdings. They had stocks, and, they had some sort of safety net to stutter through that tough period. Now all those are gone. I mean, the baby boomer, I don't know anybody who's trading the stock market except for these high-frequency trading computers. The real estate prices, they've come back, but, it's not going to be the safety net that was there in 2008. And I think we had, as a nation, a lot more faith in the central bankers and even this hope and change Obama that was coming into office. So I think there was a lot of faith that's going there. I'm telling you, on a psychological basis, whenever this next collapse happens, it's going to be far worse than 2008. And if you're not prepared today for that, God help you.
Yeah, I mean, we saw yesterday, and we talked about this, the stock exchange all of a sudden shutting down. And again, when you look at it, it was dropping. And the stock exchange, they don't just have one system, they have redundant systems. And they always can fall back on the other. And I just can't believe that this glitch was in every redundant system, because that's not how you really support it. You don't have the same exact software. You kind of change it around a little bit just in case something fails. And if they did make an update that they had to fix, they wouldn't do it to every single system. So a computer glitch really doesn't sound plausible at this time. I think the market was coming down and they just had to shut it off. But we see the market coming down, and now, of course, today everything's okay, everything's fine. And then we get word from the Treasury saying that they're not going to produce these Silver Eagles anymore, that there's a shortage. I mean, can you explain, I mean, is there a silver shortage?
No, there's not a silver shortage. There's a production shortage because of the increased demand. So unlike the stock market and you know, the paper fictitious world out there where they can print unlimited amount of money overnight, you know, do trillion-dollar bailouts, you know, secretly behind the thing. When it comes to Silver Eagles, there actually has to be silver that's mined. There has to be silver that's blanked, silver that's struck, silver that's delivered. I mean, it's a long chain of physical labor that goes into this, you know, the finding, mining, refining, production, and then delivery of physical silver. And we've been going through a 4-year bear market where there's been a lot of destruction in the mining industry, you know, that they have been able to reinvest into the silver production. So silver production in Mexico, I think last month fell 12%. HSBC came out with a report saying that 2015 or 14 is going to be peak silver, which is the most amount of physical silver ever being produced, and that we're going to expect to see lower and lower production going forward. And then on the retail end, you know, you have all these downdrafts. We just did a video of Bullion Direct. They went out of business on last week, and it doesn't look like it was nefarious. It just looks like the business has been bad for so long. You know, you have employees, you have overhead, and if you're not, you know, moving metal and making money, you know, you can't stay in business. I did another video, Northwest Territorial Mint. It's got a 4-month delay on orders from the people made in April, and I don't know if that's bad business or what. But as far as the U.S. Mint shutting down production, this has happened before, not in the middle of summer. Like, summertime is usually the weakest part of the year when it comes to demand because, you know, there's seasonal effects in it. And it usually starts in the fall and rallies all the way into the spring. Sell in May, go away, and then summer sucks. And then by the time the fall comes, you know, it's rallying again. I mean, it's sick. You can watch a lot of these chartists out there, you know, who show that. So even my own business, you know, I'm in the silver business. I design silver coins, these Silver Shield coins. I've made 45 different designs. I've been doing this for 3 years. And, you know, I planned on having a long, boring summer and then having, you know, really good stuff coming out in the fall when the market picked up. And, you know, May was horrible. April and May were horrible sales. June doubled May sales. It went from I think 2.2 million Eagles sold in May, and then I think in June it was like 4.8 million, which was a great month, but nothing super record like, you know, we got to talk about it. And then July came, and I think within the first 5 days they did 1.8 million, which is almost as much as they did in you know, all of May, and half of what they did in June. So you could feel this momentum happening. And then the 7th. There was a rumor that 2 million ounces of Silver Eagles were sold in the first hour of business that day, and that's what caused the silver, the U.S. Mint to say no mas. You know, we don't have that kind of production in the pipeline because the U.S. Mint, they don't produce their own blanks. You know, they actually, I think Sunshine Mint out in, you know, Idaho or whatever, they're the ones that produce the blanks. So if the U.S. Mint is going to sell Eagles, they have to order, you know, all these blanks from Sunshine way in advance, and it takes weeks to get this done. So when you see a sudden surge in the system, and they can't get the blanks made to fill that surge, they have to say, you know, we're not going to just sell stuff that we don't have. I mean, that's the right thing to do. And they said that they're not going to sell until August. Now, the thing that I want to point out to everybody is, okay, if they sold 2 million ounces and that was enough to shut down the largest retailer of silver, the U.S. Mint, 2 million ounces, I mean, what is that? That's like $30 million. Like, in the grand scheme of all these billion-dollar corporations, trillion-dollar economies, $30 million worth of silver shuts down that market. That shows how thin this market is, you know, how valued or how produced the line that $30 million on a day should shut down for weeks this market. So there's not a shortage of silver, but there is definitely a stranglehold in the amount of production that can be put in there. There's certainly an amount of problem when at these low prices. And this is also on the same day. God, this is also on the same day that silver was down $1. Like, what real world has the paper price of silver drop $1 and record physical demand to shut down the world's largest mint, and the price stays down? Like, if anything, that should have shot the price up, $4, in any other market. That should have shown that there's a huge physical demand for this physical asset, and yet the paper price totally did the complete opposite of what we would normally think. So this shows that it's a completely rigged market. It's a very thin liquid market, that silver is the Achilles heel of this entire banking system, and they work very hard on keeping it down and keeping you averted, while they say everything's all fine in Apple stock and eBay and all these other paper assets out there, and go buy a car and go buy a house, and don't ever look at real tangible wealth that has lasted 5,000 years like silver and gold.
So, I mean, since there is this much demand and we see that the precious metals are manipulated, what do you think is going to trigger it for the metals to go back up? I mean, right now...
Physical defaults. People cashing in paper contracts for what they thought that they had and realizing that there's no metal there. That's when this is all going to end. There's a certain limit on the amount of illusion that can be passed on to people. And as soon as just like when you see those videos of the magicians showing how the trick is done, there is, I think, 120 paper contract, there's 1 billion ounces of open interest in silver right now. Paper contracts, 1 billion ounces of silver. Now, the whole world over an entire year only produces about 800 million ounces. So right off the bat, there's more paper contracts in any of these given months, and most of it falls in the, usually within a 2-month period, but 1 billion ounces, which is more the entire world's production. Now, take the fact that there's only about 50 million physical ounces in the vaults that they're trading. So I don't know what the math works out to. I think it's 200 ounces of paper for every 1 ounce of physical silver, and I don't even trust the physical numbers that they're showing. So at some point, the physical silver is not going to be there. Somebody's going to say, hey, here's my contract, give me my silver, and it's not going to be there. That's when I think the whole system is going to break down. That's when there's going to be scramble for physical. No one's going to trust the paper prices, and that the physical prices start to detach. And we're seeing, this happened on, Tuesday, 2 days ago. We're seeing the premiums, which is the valuation over the physical silver price, start to rise on the retail level because it's starting to get tight. Now, it hasn't gotten, so extreme now where it's, ridiculous. But I tell you what, in 2008, I've been invested in silver since 2005. But in 2008, silver went down just like this market, down 65% from its high. So it went from $21 down to $8. But the difference was in 2008, because it was so fast and hard, the premiums were huge. So you may have had $8 physical or paper silver price, but if you wanted to buy silver, you had to pay $16 for it, almost 100% premium for the physical stuff that was totally detached from the paper stuff. And this time around, the price of the paper price of silver has dropped, so has the physical price, because it's been a longer, drawn-out market where the silver stackers are not as aggressive all the way down. That said, July 7th, when the price went down $1, the silver demand rose like crazy, shut down the U.S. Mint, and the premiums at all the dealer levels instantly started to rise. And I suspect as this Greek crisis moves forward, as we see more glitches in the stock market, as we see the Chinese, threaten to hang short sellers and all this other stuff, and that, we have all these economic, global, systemic problems happen, there's going to be more and more money chasing after physical assets out there. And if we have $30 million shutting down the U.S. Mint, you're going through an eye of a needle to get to the next paradigm, and that's what this wealth is. It's insurance policy against bankers. It's an insurance policy against politicians. It's an insurance policy against the systemic risk. It's an insurance policy against counterparty risk. It's an insurance against fiat assets. This entire way of life, and $30 million. I mean, I've known people in my life who have that in their, JP Morgan account. Like, it drives me nuts. It drives me nuts that the average baby boomer millionaire guy can, buy up the entire U.S. mint production and shut it down for a couple months. I mean, that's how thin this market is.
So let me ask you, I mean, I have two questions here.
Mm-hmm.
When do you think that this whole thing is going to completely fall apart, the economy? And the second question is, what can people expect when it does fall apart?
I mean, I thought 2008 was going to be it. I didn't realize, at my immature level that, this was an institutional crisis and that the governments were going to step up. I thought it was just the market was going to override everything. But I've said all along, I said, whenever the next crisis happens, I don't know when or where or how it's going to happen, I can assure you it's not going to be like 2008. It's going to be far worse. These are not puny billion-dollar corporations that made bad bets. These are now sovereign nations. These are generations that have, invested in consumerism and invested in corporatism, invested in government bureaucracies, invested in wars, all these unprofitable things that don't make people's lives better. You look at all the people who are making the most amount of money in this paradigm, the stockbrokers, the lawyers, the military contractors, the politicians, the celebrities. They provide zero tangible value to humanity. Nobody's lives are made, tangibly better. Nobody's food, bellies are being filled. Nobody's education's getting better. We're not bringing out the best in humanity. Even our arts are horrible. I mean, the music industry is rife with, bebop, electric, no thinking lyrics. The movies are all about zombies and gore, and there's certainly no inspiration there or beautiful art. Even the art market, I was looking at the top 10 most expensive pieces of art that was sold. 10 pieces of art sold for $800 million. And I looked at them and I was like, I wouldn't even hang these in my room. I mean, they're skewed views of humanity. There's all this modern art. It's just really warped mentality. But all this stuff is got to come to an end. And when it does, man, it's going to be hard and fast because a lot of people are going to learn some very hard lessons that they don't have any real skills. 70% of the United States economy is built off of consumerism, which is basically shuffling paper, products, and people around. That we don't produce anything of real value. We're not, the world's largest manufacturer anymore. And, now that our oil shock is going down and we don't even produce, valuable oil anymore. I mean, the price of oil has been, shut down so much. People don't have any real friends anymore. You think about all these corporations that have picked up all these, young men and their families and move them all over the country to get to different places, that they have uprooted the family structure of all these people, and that we don't even have real friends. I mean, Facebook is now considered, I like something, and now all of a sudden you're a friend. No, you real friends, you share the deep thoughts, the things that you wouldn't post on Facebook, and there's a lot of lonely people out there who don't even have any real friends. And then the last thing, nobody has any real wealth. I mean, I was the same way. I mean, I used to look at my brokerage account. Oh, I got a lot of digits in my account. I'm really wealthy. Ha, ha, ha. I got the system figured out. And I realized that all it is a digital illusion of real wealth. It's a future promise on real wealth. Money, stocks, all that stuff is not worth anything until you exchange it for something real that you can use. And it's a sad fact that nobody's got any real skills, nobody's got any real friends, and nobody's got any real wealth. So when everything starts falling apart, that's all you're left with is reality. You realize how broke you are. You realize how lonely you are. You realize you don't have any value, and you don't even have any skills. We have such an ill-educated society that's been indoctrinated into just doing what people, tell. We don't even have creative people anymore. Everything's been monetized and photocopied and done. There's very few creative people out there, and if there are, they're not being encouraged and incentivized.
So when this does come down, I mean, are people going to be able to get money out of the bank? Are people going to be able to get food?
No, look at what's going on in Greece.
So you're thinking, and I think the same thing, that it's going to pretty much happen here almost the same way, actually probably a little bit worse because a lot of people are sleeping, they really don't know what's going on, and they're going to be taken by surprise.
Yeah. No, it's not going to happen like Greece. All right, so here's a fundamental thing that I think people need to do. My family and my wife's family is Greece. We have relatives that are in Greece. What Greece is suffering is from a deflation. They're suffering from a lack of money inside the system, and it's because Greece doesn't have their own central bank to print their own amount of money. The United States has the benefit of the Federal Reserve, of the government being able to issue debt in the currency that we use, and they're able to print any amount of money out there. So while Greece is suffering a deflation, I believe the United States is going to suffer the complete opposite lack of or collapse of the money system, which is called a hyperinflation, and that's when the government takes out more money and spends more money into the economy, so you have more dollars chasing after fewer and fewer goods, and that the purchasing power of those dollars becomes worth less. So in a deflation, those euros actually buy more as people become desperate because there's no money there. They'll take anything for a couple bucks or a couple euros to go buy the next good. The United States is going to be the complete opposite, coupled with the fact that the United States prints its own money, showed in 2008 that it'll print unlimited amount of money to support the system. But you also have the added benefit, and I put that in finger quotes, you have the added benefit of the entire world who's been importing all these dollars for generations for all the real goods that they have. So you got like China that's got a couple $1 trillion worth of dollars. They're no longer going to want these dollars, so they're going to go into the open markets and spend when the confidence is lost in these dollars. So then you're going to have the United States government destroying the value of the dollar, all these foreign governments, all these foreign investors trying to be the guy at the last chair when the music stops. And they're all going to flow all this money and start making ridiculous bids for real assets. And that's when I think gold and silver are just moon rocket. Like you cannot put a dollar price on gold and silver in a hyperinflation, because at that point it's not even what the value is of the gold and silver. It's about the currency that it's being exchanged for having no value. Like how much error do you need to quantify an ounce of gold? And the answer is infinity.
Well, listen, Chris, thank you for coming on the X22er Spotlight. I really appreciate it. Thank you very much. And I'll put all the links to his sites at the bottom of the video. Thanks for being on.
Oh, thank you so much. And I hope to do